I want to teach you the best settings and combination for EMA. You're going to learn a very accurate trading strategy that tells you exactly when to enter and exit. So make sure you watch this video until the end and let's get started. Before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, we need to add 3 exponential moving averages to our charts, but before I add them, I must mention here that these settings and the strategy that I'm gonna explain can be used on any time frame. So depending on your trading strategy and trading style, you can effectively use it. Alright, now we need to add the exponential moving averages to our chart. On TradingView platform, here we click on indicators and we search moving average ribbon. We add this one, which is a built-in indicator on TradingView platform. The reason that we add this ribbon is that in the free version of TradingView, you can only add 2 indicators, but by the help of this ribbon, we can have 3 or more moving averages on our chart. Now we need to change its settings, so we go to the settings of the indicator, and here we remove one of them because, as I said, we need 3 moving averages, and the 3 of them should be exponential moving averages. So here we set EMA for them. And then here for the first moving average, we set the length at 9. For the second moving average, we set the length at 30. And for the third moving average, we set the length at 200. Then for the first moving average, we set the color to red. For the second moving average, we set the color to blue. And for the third moving average, we set the color to white. Then we go to the style tab, and for the 3 moving averages, we increase the thickness of the moving average line so they will be better visible on our price chart. Alright, we're done with the settings of the exponential moving averages, and now I want to teach you how you can trade based on this, but we're not gonna trade only based on these exponential moving averages, and we're gonna use these EMAs with a price action trading concept, so the probability of our trades become very high. It's very easy, and you just need to listen carefully to all of the points that I'm gonna explain. After that, you can run this trading strategy in practice like a professional, so stay tuned and let's get started. But before that, I'm proud to announce that recently I published a book, The Art of Price Action Trading, which is a comprehensive guide to price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, getting back to our chart. So here we have 3 exponential moving averages. This red line is an EMA with length of 9, the blue line is an EMA with length of 30, and the white line is an EMA with length of 200. For this white line, we're going to use it for identifying the major trend of the market. When the price is above the white line, the major trend is up, and in times that the price is below the white line, the major trend is down. Then we use this red EMA and blue EMA for identifying the minor trend. When the red line is above the blue line, the minor trend is up, and when the red line is below the blue line, the minor trend is down. So in times that the major trend is up and the minor trend is also up, it shows that the trend is strong and the upside momentum has strength. But in times that the major trend is up but the minor trend is down, like here in this part or here in this part, it shows that the upside momentum is losing strength. In other words, the uptrend is weakening. This weakness can be because of 2 situations. It can be just a temporary weakness because of a pullback, like what happened here, or in another situation, the weakness can become more serious and we may get a reversal to another trend, like what happened here. Alright, on the other hand, when the price is below the EMA 200, this white line, this shows that the major trend is down. And similarly, we use the red line and blue line to identify minor trends within the downtrend. When the red line is below the blue line, the minor trend is down, and this shows a strength in the downside momentum of the price. But when the red line is above the blue line, this shows that the minor trend is up, and this tells us that the downside momentum is weakening. As I said, this weakness could be just temporary because of a pullback, like what happened here, or it can be more serious and leading to a reversal. Alright, now let me teach you how you can find buy-sell signals based on these exponential moving averages. This is a trend following strategy, which means that we try to find buy-sell signals that are in the same direction with the current trend of the market. As I said, we use this white EMA for identifying the major trend of the market. Here, since the price is above the white line, we can say that the market is in an uptrend. Now, in the next step, we want to find a good opportunity to enter a long position within this uptrend. As you know, when there is a pullback, it's a good opportunity for entering a trade. As I explained earlier, when the red line goes below the blue line while the price is above the white line, this can be a signal that probably a pullback is forming on the chart. In the next step, we wait for the red line to cross back above the blue line. When the red line is closed back above the blue line, we can say that probably the pullback ended and the price is gonna advance more. But we want to decrease our risk as much as possible. We want to only take the trades that have very high probability of success. So we use a price action trading concept for more confirmation. When we got that confirmation, we will have higher probability to win the trade. Let me teach you how you can do it. So until here, when the red line is closed back above the blue line, we can say that probably the pullback ended. For this pullback, which started from here, we mark the high, which is actually the last swing high, as you can see. And after that, we wait for the price to close above this level. Why? Because this level can be a potential resistance level, and maybe the price get difficulty to pass this level. So when the price closes above this level, we can say with higher probability that there is enough upside momentum for the price to further advance. Alright, here you can see that this candle is already closed above this potential resistance level. So in practice, we could enter a long position at this point with the stop loss below the blue line or below the last swing low and profit target at 1.5 risk to reward ratio. Alright, moving on the chart. Here you can see that the red line went below the blue line while the price is still above the EMA 200 at the time, giving us the probability that maybe a pullback is forming, but you can see that the price just declined and went below the EMA 200. And now in this situation, when the price is below the white line, we should look for short position opportunities, and we identify pullbacks when the red line goes above the blue line. But here you can see that again price went above the EMA 200 before turning to a downtrend. From here you can see that the price went below the EMA 200. And now we should look for short position opportunities. As I mentioned earlier, we wait for the times that the red line goes above the blue line, which tells us that probably a pullback is forming within the longer term trend of the market, which is a downtrend. Then we wait for the red line to cross back below the blue line. When the red line is closed back below the blue line, we can say that probably the pullback ended, but we need more confirmation to decrease our risk as much as possible, because if we only trade based on this crossover, we can encounter many false signals. During this pullback, you can see that at this level, we had several times returning of the price, making this level as a support level. So instead of marking this level, which is starting of the pullback, we can mark this level, because here we have proof that this level is a support level. You can see how many times the price returned from this level. So we wait for a candle to be closed below this level, which happened here at this point. So in practice, we could enter a short position at this point with the stop loss above the blue EMA or above the previous swing high and profit target at 1.5 risk to reward ratio. Alright, here you can see that while the price is still below the EMA 200, the red line crossed above the blue line, and then here it closed back below the blue line, as you can see. But you can see that the price didn't go down and break the previous swing low. If you traded only based on this moving average crossover, it was a false signal. But you can see that this trading strategy, which is a mix of moving averages and price action trading concept, worked very well here. Alright, here again you can see that the red line crossed above the blue line, but the price just kept advancing closing and went above the EMA 200, telling us that now we are in an uptrend and we should look for long position opportunities. Here you can see that the red line went below the blue line, and here it closed back above the blue line as you can see. For this pullback, we mark the previous swing high and we wait for a candle to be closed above this level, which happened here as you can see by the help of this candle. So in practice, we could enter a long position at this point with the stop loss below the blue EMA or below the previous swing low if it is not very far, and profit target at 1.5 risk to reward ratio. Moving on the chart, here you can see that again the red line went below the blue line, and here it closed back above the blue line as you can see. But before having the price closing above the previous swing high, again you can see that the red line went below the blue line, and here it closed back above the blue line as you can see. We marked the previous swing high, which is the starting of this pullback, and at this point you can see that we got a candle closed above this level. So in practice we could enter a long position at this point with the stop loss below the blue EMA and profit target at 1.5 risk to reward ratio. Moving on the chart, here again you can see that the red line went below the blue line. Here we got the closing of the red line above the blue line at this point, but you can see that the price didn't advance and we didn't get any close above the previous swing high. If you entered a trade only based on this crossing, you can see that it was a false signal, but by further confirmation of price action, we correctly don't enter any trade in situations like this. This trading strategy, which is a mix of moving averages and price action trading, is very accurate, but it doesn't mean you will not encounter false signals. No, this is not possible in reality, and there is no trading strategy with guaranteed signals. So you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a consistent profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.